Let's start with the ECB. You expecting a dovish-sounding bank later on?
Yeah, I think that the tone will be dovish. I think the kind of tone we had in March, the ECB officials subsequently sort of came out and said the market misinterpreted what Draghi was trying to say. I think given the low inflation number, it's almost certain that we will see a dovish tone. However, that's unlikely to translate into any genuine action. I think, you're probably talking May or June for a real move by the ECB. And then I think it's only really a 15 basis point cut in the refi rate.
All right. And in terms of market reaction, I'm just looking at a Reuters FX poll there. Euro dollar. Tell me what you think of this. 137 a month from now, 133 6 months from now, and 129 a year from now. What do you think?
I think that largely sort of reflects a bullish dollar story on the medium term. I think markets are sort of factoring in that the Fed will sort of tighten in 2015, and that inevitably will boost the dollar. But I think what the market's saying and what it's looking for is a pretty stable euro dollar in the short term. And I don't think today's meeting is really going to change that 137 to 140 range on euro dollar.
What are you expecting for payrolls?
Well, payrolls, I think, are obviously the big sort of swing factor this week. If we look for something around the 180 mark, I think the market's, not going to sort of see a big movement, and then we'll swing either way. But to be honest, I think we may well have to wait until we get to the April FOMC and get some more guidance from the Fed in terms of what they intend to do going forward. So I think even the payrolls, although people are waiting for it, I don't necessarily know if it's going to be a big trend move.
All right. Obviously, the context, and you and I have talked about it many times, is also involves China, of course. I talked about the latest measures just now in terms of stimulus. The markets seem very excited by all of this. Are they getting ahead of themselves?
I think a little so, because although China wants to protect growth at 7.5%, it's not going to launch a massive 2008-style stimulation package. So I think that the measures you're going to see are going to be similar to the ones that we've just had announced today in terms of bringing forward some expenditure. It's not going to be large new fiscal stimulation. It's not going to be large monetary stimulation. And I think is designed to offset the squeeze that's ongoing in the financial system. And they very much do want to actually clean up the financial system this year as a stepping stone to internationalization of the yuan in the coming years. And I don't think the market's fully factored that in. I think that there is going to be more selective defaults. There is going to be a significant headwind in terms of growth. And I think the market's probably just swung to be a bit too optimistic about Chinese stimulation.